Hello, everyone. Just got started, so just waiting for everyone to get online. All right, there are already a few in the room, so I'll just start with the introductions. Thank you for joining me. I'm calling from Singapore, where lockdown has just started. COVID is affecting the whole world right now, but this is still something very topical. A lot of conferences are being held through webinars and Zoom calls, etc. So anyway, without further ado, let me launch into the presentation that we have today. So today I'd like to share with you more about the new Payment Services Act that has just come into force in Singapore. So the bill was passed in January last year, and it got into effect in January this year. So several companies have already applied for exemptions, and many companies are applying for the license. There are over 400 companies that have applied for the exemptions and have indicated that they are going for the license. So anyone who needs access to this list can get in touch with me, and I'll be happy to share that list. But in the meantime, I'll give you more details about the Payment Services Act and how this might impact you, what are the things to look out for, and what's happening in the industry. So my name is Malcolm. I'm a practicing lawyer from Singapore. I have my own law firm, and I have my own advisory company as well called Gravitas, which a lot of you may be familiar with. We specialize in the digital assets and cryptocurrency arena. I'm also the author of a book, How to ITO in Singapore. And this is the second edition, which we published in May last year because of the new Payment Services Act. The first edition was published in October 2017. So about the Payment Services Act, how does this impact everybody? So essentially in Singapore, prior to the enactment of the Payment Services Act, Singapore has been one of the most welcoming jurisdictions for cryptocurrencies and digital assets. A lot of companies set up operations in Singapore and have been operating without a license. So long as the activities do not touch on securities, MES, the Central Bank of Singapore, Monetary Authority of Singapore, did not really come in and police anything. But anytime anything happened, they would talk to the perpetrators, and there were a few projects that stopped their activities, a few parties that stopped their activities. But by and large, a lot of companies have been operating out of Singapore, have issued their tokens out of Singapore, and without any licensing or regulation requirements. But now with the new Payment Services Act, all of these token issuers would need to get licensed. And a lot of services have now been rolled into the Payment Services Act. And I'll share some slides right now, and that will give a bit more structure to this presentation. So let me just open the slides up and share it with everyone. Okay. Let me try that again. Okay, here we go. The Payment Services Act. So today we'll go through basically the Payment Services Act. The agenda we'll speak about today are in these chapters. The rationale, I'll go into the regulated activities, the excluded activities, the exempted entities, 3 licensing tiers and classes, and transitional provisions. As I go along, if you have questions, you can type them in and I'll see them in my chat button. And if I can, I'll answer them. But otherwise, I'll give some background about each of the areas that we talk about as we go along. Okay. So what's the rationale behind the Payment Services Act? Essentially, Singapore, as many of you will be aware, is at the bleeding edge of technology, of fintech, of anything to do with the financial industry. MAS, the Monetary Authority of Singapore, has a very good reputation globally as a tough regulator, but at the same time a very fair and efficient regulator. So in Singapore, the government has seen a great need for fintech growth and has taken on upon itself to open up payment services for the industry, not only for Singapore, which has a very small market size, but for global and international financial institutions as well. So there are, with the advent of technology and fintech, with cryptocurrencies and digital assets, there have been more and more risks that have been coming into the space of payments and financial transactions. And therefore, with a need to protect users and with an increase in technology risks, Singapore has recognized that these need to be safeguarded against, and therefore this is one of the requirements for why these regulations came about. So basically in scope, I'll go through the main points that we are highlighting today. The background is that unregulated tech-based payment systems present risks to the entire financial ecosystem. And consumers might be at risk as well because they are using unregulated payment services. And furthermore, a lot of cybercrime is utilizing these new technology platforms to be committed. So therefore, the Monetary Authority of Singapore has rolled out this new regime under the Payment Services Act. So it has created modular and risk-focused frameworks to regulate this industry. So the reference has been taken to Australia, Hong Kong, Japan, and the UK in terms of what other regulators have done, and therefore these new regulations have come about and are now in force in Singapore. So basically, the Payment Services Act comprises of two regulatory frameworks: an activity-based licensing framework for payment service providers and a designation regime. And it has already commenced as of 28th of January 2020. So what has happened is that this new act has repealed the previous Payment Systems Oversight Act and the Money Changing and Remittance Businesses Act. And it has rolled 7 activity areas into one license. So under this new license regime, if you have a license, you just have to specify which of the activities that you are regulated under, and you are able to perform those activities as long as the license has been furnished by MAS. So what exactly are these regulated activities? And this is where I'll spend a bit more time. So there are now 7 regulated activities: account issuance, domestic money transfer, cross-border money transfer, merchant acquisition, e-money issuance, digital payment tokens, and money changing. So under the old regime, you will notice that cross-border money transfer, basically for outbound remittance, meaning money coming from Singapore to international destinations, were regulated under the previous remittance licenses. And secondly, under e-money issuance, if there is a certain float that the e-money issuer was handling, then that would have been a licensed activity. For example, those of you in Singapore are familiar with e-money in the form of EasyLink. So EasyLink is a card where you can use it can be used to pay for various services, and especially in transportation. So a similar card is found in Hong Kong, for example, the Octopus card. So these are considered as e-money. So previously, prior to this act, the e-money issuance was also regulated under the stock value facilities regulations in Singapore. But now this is under the Payment Services Act. And of course, money changing. So if you come to Singapore and you deal with cash, you want to change cash currencies.
No sound.
Testing. Can you hear me? Yeah. Testing. I'm hearing that some people cannot hear me. So no issues. If that no issues, I'll get back to the slides. Right. Okay. So money changing. Yes, I was saying if you are buying and selling foreign currency notes in Singapore, then that's a money changing license. So there are new activity areas, account issuance. So this is very applicable to all of you out there who are operating digital wallets. So essentially, if you are issuing stored value cards, non-bank issued credit cards, e-wallets, digital payment wallets, then these are considered as account issuance. So for example, if you're running a business like Ledger or Trezor, right, these are hardware wallets. So if you provide online wallets as well, this would be something that is regulated. Or if you are issuing debit cards under programs like MCO, or like 10x, right? These would be considered as account issuance. So any exchanges that are also operating and issuing their own digital wallets would probably be considered as having to get an account issuance license. Secondly, under domestic money transfer, this was not an activity area that was regulated before. So with this new Payment Services Act, this is now regulated in Singapore. So essentially, it means that if you're providing payment gateway services in Singapore, payment kiosk services like ATMs, right, and you are allowing money transfer from point to point in Singapore, then this is required. For cross-border money transfer, it basically is a replication of the previous remittance licenses. So if you want to remit money overseas under a regulated activity, then this is required. For merchant acquisition, so this is for businesses that want to do something like WeChat Pay or Alipay, where you're providing a online payment gateway. You are onboarding merchants and you are giving them APIs to connect to you so that you can do settlement. So essentially, it's the provision of merchant acquisition services in Singapore, where you are processing the payment transactions from merchants that are within your ecosystem. E-money issuance is important for consideration as well, because this has expanded from the original concept of stored value facilities to also include digital payment tokens, which are stable coins. So people who want to deal with e-money such as USDT, Tether, or USDC, PUSD, GUSD, etc., or issue their own e-money, which is a stable coin, would require an e-money issuance. So there is a segregation of stable coins and non-stable coins in Singapore, and the authorities have indicated that the e-money regime does cover stable coins. So if you are a stablecoin issuer or a stablecoin merchant, like an OTC, over-the-counter brokerage or platform, then this is required. Digital payment tokens is basically what the entire crypto exchange market has been looking at. So these are widely regarded as utility tokens. So if you're an exchange or you're a utility token issuer, then you will need to get a digital payment token license. So if you're an exchange that does only crypto to crypto, that's a digital payment token license. And if you are issuing your own cryptocurrency that is not a security and not a stable coin, then you also need a digital payment token license. And finally, I mentioned earlier money changing. So if you are intending to do fiat transfers or exchange in Singapore, that means cash transactions, then money changing is required. So what are excluded? These are all the categories which are not under the Payment Services Act. So for example, if you are an authorized commercial agent, payment service provider, transaction provider, a related corporate transfers, that means between company and company that you own within the same system. And if it's within a certain payment system, that means it's not external, then this is also okay. And document-based transaction. So if you are only moving paper and not moving money, then this would not be under a payment service. Transportation of currency, so like business like Brinks, right? That's not a payment service. Other activities that are not payment services are non-profit currency transfers. So if you operate a foundation or a non-profit organization and you are transferring funds, as long as you are not collecting a profit, then that's also considered as an exemption under the Payment Services Act. If you are a central bank operating to deal with other central banks, or if you are issuing your own CBDC, right, that's all the rage right now, central bank digital currency, then you do not need a license. If you don't possess money, right, so, because this is a Payment Services Act, so it covers payment methods, it covers payments, covers money. So if you are not in possession of money, then that's also an exemption. It's not an activity that is required, that requires a Payment Services license. So other activities are under licensed or exempt or approved entities, right? So for example, services that are provided by financial advisors, by insurance agents, by capital market services license holders. These are all already licensed or exempt and approved entities that can already transact without having a Payment Services license. So the segregation in terms of Payment Services Act and Capital Market Services licenses, or the Securities and Futures Act, is essentially whether you define something as a payment or whether you define something as a security. So if it's a security or a futures kind of product or service, then it will go under the old Capital Market Services licenses. If it's something new or under money changing remittance, then it's more likely to be under Payment Services. So limited purpose digital token and limited purpose e-money, what's the meaning of that? Essentially, the meaning is where you only have a small ecosystem where your own ecosystem can use it. So for example, if you have a group of companies that is using a token that is going to be translated within, that's going to be a transaction token within it, then you don't need a Payment Services license. But if you are intending to use this token or let external parties use it, then you would need to get a license. So this is the meaning of limited purpose e-money and limited purpose digital token. So within your own ecosystem or open to the world at large. So now I'll go into exempted entities. The exempted entities under the Payment Services Act are basically financial services that are already regulated under the various older regimes. Banks, for example, are exempted under the MES Act for central banks, merchant banks, finance companies, etc. So all these are exempted. And anyone who's under the Financial Advisors Act, the Trust Companies Act, Insurance Act, etc. These are all exempted entities as well, because they are already licensed under another activity area which is regulated by Monetary Authority of Singapore. So, but please note also, just because you fall under one of these other categories or these acts doesn't mean that you are fully exempted. Because if you are dealing with relevant payment services which are defined in the Payment Services Act, then you would still need to have a Payment Services license. So for example, if you are issuing e-money, you are issuing digital payment tokens, or you're dealing with them, you are going to connect gateways to merchants, you're doing money changing, etc. All these, even if you are falling under another act, you will still need a license under the Payment Services Act. So there are three main classes of this license. The money changing licenses are basically for money changes only. That means you're operating a shop, a physical shop, where you are exchanging a certain foreign currency for Sing dollar or currency versus currency. So these are considered just the pure money changing licenses. Secondly, if you are operating a standard or major payment institution, these are two other categories. So the main reason for having different classes is to mitigate against the four key risks, which you can see on the left of the slide. AML CFT, so anti-money laundering and counter-financing of terrorism. This is a very key requirement of the Monetary Authority of Singapore to ensure that these risks are mitigated against. Secondly, to protect users against fraud and insolvency. So basically, companies that are operating under these licenses need to show a certain financial health, and this will protect the consumers and users who are using their services. Thirdly, the concept of interoperability, so that everything can be housed into one license class. So that's the main reason for putting 7 different business activities into one license class. And key technology risks such as cyber security and cyber risks, right? Because as you can all read from the various news that you come across, a lot of hacking happens, a lot of cyber crime happens. So these license classes are to protect the consumers, protect the users who are using the payment ecosystem afforded by Singapore. So standard payment institutions are different from money changing licensees because they are a provision of a combination of 7 different types, but below a certain transaction amount. So the transaction limit is $3 million for any activity type. So for example, if you're a license holder for one activity type and you're a standard payment institution, then you can only take a float of $3 million monthly transactions. If you have 2 or more activities, then you can combine this float, and it can be over 6. You can be under 6 million monthly transactions. And if you are doing e-money, then you can handle up to $5 million worth of daily outstanding e-money, basically in your float. So this is the standard payment institutions are more lightly regulated than the major payment institutions. And you will need to provide disclosures to customers and users who use your license activities. The highest tier of the license under the Payment Services Act is the major payment institution, or what people call the MPI. Right? So the MPI and SPI are different because the MPI has no limits. Right? So it's any combination of the 7 defined payment types with no transaction flow or e-money flow thresholds. So obviously, if you are able to transact large amounts, you will be subject to a lot more regulation, a lot more safeguards for consumers and users of your ecosystem, and a lot more protection against your insolvency. So the additional requirement between a MPI and SPI is that the capital requirement is higher. SPIs require 100,000 paid up capital. MPIs require 250,000 paid up capital. And MPIs also need to furnish a bank undertaking or guarantee or a deposit in a trust account, which amounts to $200,000. So these are monies that are put away, or guarantees that are put away in case something happens and the entity becomes insolvent. So at least there's some money to pay back to customers. So next, I'll go into what the risk focus is like in this licensing regime. So as you can see, the different categories, A, B, C, D, E, F, G, these are the 7 different activities. And then you can see the 4 key risks which are identified, and what are identified as the issues, and what are identified as the requirements. So this will help you if you are an applicant for these licenses, and also from your operations perspective, compliance perspective, you can understand more about which of these categories and which of these risks are the most important to consider. So for example, interoperability, which I mentioned earlier. Interoperability is to ensure no fragmentation across payment solutions. So interoperability is basically covered under account issuance and merchant acquisition. Right? User protection, protection of access to funds, safeguard funds in transit, and safeguard the float is applicable for account issuance, domestic transfers, cross-border transfers, merchant acquisition, and e-money issuance. Right? So user protection against fraud and insolvency. The third category of risks is money laundering and terrorism financing risks. So basically, you would require enhanced or simple customer due diligence, CDD, customer due diligence, when you are operating an account issuance service or domestic transfer service, cross-border transfer service, digital payment token, money changing. So these are all the money laundering and counter financing of terrorism risks. And finally, because most applicants would And most businesses, in fact, in this day and age are using technology. So all of them would have to comply with the MAS guidelines on the technology risk management and also on cyber hygiene practices. So these are published guidelines and published criteria for obtaining these licenses. So next, I'll go into grandfathering and transitional provisions. Those of you who have already looked at the MES list of applicants, who have seen the 420 applicants to these provisions, can see that some of them have already obtained licenses. So the meaning of the grandfathering provisions is that under the Payment Services Act, it provided that those who already had licenses when the Act came into effect would already have grandfathering provisions to give them existing licenses. So those entities in the market in the Singapore ecosystem who already held a remittance license, money changing license, approved SVF, a stock value facility holder, like I mentioned, like EasyLink, or like in Hong Kong is the Octopus card, right? Or a combination of any of these licenses would already have a grandfathering provision and become a standard payment institution, a major payment institution, or a money changing licensee, right? So you can see on the right, remittance license holders will be converted to MPIs if there's cross-border money transfer. Money changing license holders will be converted to money changing license holders. Approved stock value facilities will be considered to major payment institutions for e-money. And if there's a combination, then there will be different license classes that are already issued under the Payment Services Act. Entities that are exempt would have been also deemed exempt from holding a license under the old regime, and under the new regime, they'll be exempt until the period ends for the exemptions. So essentially, exemptions would apply for 6 months for digital payment token issuers or digital payment token dealers like crypto exchanges for a period of 6 months, meaning that exemption period ends in July 2020. And for all the other 7 categories, the exemption periods will end in 12 months. So what this means is that for the 400 plus applicants for exemptions, they are already exempted, and the exemption ends in 6 months or 12 months time, within which they would have to apply for a license. And once they apply, the exemption will still last until they get rejected. So we're not sure whether if rejected and you appeal, it still applies. Probably not, because it's already been rejected. But it may extend the period beyond the 6 months or 12 months that you see. In view of the popularity of the Payment Services Act and the new licensing regime, and over 400 applicants to this new regime, we are of the view that MES is probably overwhelmed right now and likely not to be able to issue licenses all at the same time. It'll probably be in batches. So not to worry for the applicants who have put in their applications. You will not get your, if you're an exempted entity, probably you will still be able to operate until MES has had a look at your application and has given you a reply. And of course, once you get a reply and you get a license offer and you fulfill the terms and conditions, then you will get a license and you can start operating. And until then, you'll be under exempt offer. So one key point about this also is that we've been speaking with bankers, and banking is still the same with respect to high-risk accounts. So a big problem in Singapore, because everything else was good for the cryptocurrency and digital asset space, except for banking, that is still going to apply until you get your license. So even if you're an exempt entity, it's unlikely that the banks will relax these guidelines. But if anyone has issues with these and want more clarity, feel free to get in touch with us, get in touch with me. Okay, next I'll go into this slide, which is explaining the safeguarding requirement of the transitional timeline. So where we are right now is in April, which is around here, right? And For the act, it came into effect on 28th of January. And then there was a 1 month period given to all entities to inform MES that they were already operating before this act came into effect. And what happened was then these 400 applicants were given a chance to carry on the activities until they apply for the license or until the exemption period ends. So basically, for monies that are already paid into the customers' accounts, then if they don't have an exemption, the entities would have to inform MES that all these monies are cleared. For monies received during a transitional period, then they must comply with the acts that are in place, right? So this money changing and remittance license act previously would still be applicable, only to the extent of these transitional timelines. So transitional provisions, which I covered briefly earlier, for payment services such as account issuance and domestic money transfer, merchant acquisition, and DPT, digital payment tokens. Basically, there are no additional conditions. You can still operate as long as you have given notice to MES that you are already carrying on such activities. So, like I was saying, there are several hundred or maybe even thousands of companies and projects that are operating in Singapore under the cryptocurrency regimes. Basically, there were no cryptocurrency regimes, so all of these entities were operating in Singapore. So for these, the exemption periods, as long as they apply, will still carry on. So these companies and projects can still operate until the end of the exemption period if they had provided exemptions before February 28th this year. Also for account issuance, cross-border money transfer inwards, and e-money issuance where the float does not exceed 30 million, these activities are still able to be carried on without a license if these entities have informed MES that they were operating before. So under the notification of the exemption, they would have received an email or notification from MES that they are good to go. They can still operate. Anyone else is not allowed to partake in such activities until they apply for and obtain a license. So basically, the 400 entities that had applied would be exempted for the rest of this period until they get a license approved or rejected. Notification form, this is already past date because the deadline for this was on the 27th of February. And we ourselves, as a firm, helped a lot of clients and projects to apply for this, and all of them have successfully obtained the exemption. So if there is an exemption, you are allowed to carry on activities, but subject to what I mentioned earlier. And the timelines for licensing is, as you can see from this slide. Basically, 28th January, the act came into effect. 27th February, the notification period ended. Up to 28th July, digital payment token issuers and platforms can still operate if they have provided a notification for the exemption. And then up to 28th January 2021, every entity can still do the activities that they're exempted for if they have the exemption. For the other six license categories, but of course subject to the caveats and the exemption and the exclusions that I mentioned earlier. So basically, after 28th January 2021, all entities that are dealing with such payment services would need to apply for a license, because that's the end of the 12-month transition period for all the different license categories. And 28th July 2020 is the end of the digital payment token regime for the exemption. So let's go into some case studies right now. Firstly, prior to commencement of the Payment Services Act and post-commencement for businesses that are doing remittance and merchant acquisition services. So as you can see from this slide, Business A provides outbound remittance services, holds a remittance license under the old acts, and also provides point of sale and online payment gateway services. So under the new act is considered merchant acquisition services. Now post the Payment Services Act, they will be deemed as a MPI, and they would then also be exempt from complying with requirements to safeguard funds for a 12-month transitional period. Now, let me digress a bit about safeguarding of funds. Now, the safeguarding of funds would have to be in a approved bank custody or a financial institution custody or a trust custody under the TCA. And this would be the way that funds can be safeguarded under Payment Services Act. The next bullet point, business A's merchant acquisition services would not be currently regulated. So as long as they have provided commenced activities before 28th January and filed a notice for exemption, then they can have a 12-month grace period within which to apply for and obtain a license. During this period, they should go ahead and apply for the merchant acquisition service license under the Payment Services Act to be added on to its major payment institution license. So the curious ones amongst you, or those who have knowledge about such business activities, if you go to websites or platforms of the various MPI, SPI license holders, or even money changing licensees, you can already see that they are proudly displaying their MPI or SPI license numbers. So that is how this regime works, right? So the next slide, case study B, for businesses that are providing digital payment tokens. So those of you who are listening in who are token issuers or exchanges who are doing only crypto to crypto kinds of business, this will be applicable. So prior to the commencement of the Payment Services Act, if you provide all these services like sale, purchase, and exchange or DPTs, so exchanges, OTC platforms, or digital payment token issuers, these would not have had a license requirement. These DPTs can be used as medium of exchange. So, for example, Bitcoin, Bitcoin Cash, Ethereum, Ripple, etc. All these, as long as people accept your tokens, you could have transacted, right? So after the Payment Services Act came into effect, if you have an exemption, you are still allowed to operate until July 2020, or until you put in your license and had a reply from MES, license application, sorry. And during this period, you should be applying for a license under the Payment Services Act. So at this point in time, we are already helping many projects and many clients to apply for such licenses, because basically a lot of exchanges were set up in Singapore and carrying on the activities under the previous unregulated regime. But now all of these are scrambling to get their licenses in place so that they can carry on activities after July 2020. So basically, from between 28th January when it came into effect and 27th February, a lot of these projects and exchanges applied for an exemption notice, and after that they are still able to operate until 28th July. But if they did not apply for and obtain the exemption, then they are not allowed to carry on their activities in Singapore anymore. Right, and post 28th July, whoever has a license will then be able to carry on the activities, but without a license, they are not allowed to carry on as well. So MES issued a notice called a PSN Payment Services Notice 01A, and this was a transitional arrangement saying that it's applicable to anyone who's providing account issuance service. And account issuance service basically had different limits that were notified. So if you are operating a digital wallet, e-wallet, where there is an account that has e-money, and as long as it's below 1,000, it's still exempted. Above 1,000, there is an issue already, right? So there's a grace period that's been afforded as well. And these are the different criteria. So relevant payment account is an account that stores e-money. And e-money in Singapore is defined as like Sing dollars, US dollars, Hong Kong dollars, etc., but in a digital form. So that's considered as e-money. And also earlier I mentioned that e-money probably also includes stable coins such as USDT, USDC, GUSD, etc. So excludes one, which does not allow e-money in excess of 1,000 to be stored. So those of you with Grab accounts, you will see that they don't allow you to hold over the $1,000. So that's basically a big reason for that's a main reason for this. Does not allow withdrawal of any currency, so you can't withdraw the cash, and you only allow refund of e-money in excess of $80 upon verification. So this is a KYC requirement. And satisfies two of the following: does not allow cross-border money transfer or withdrawal, and B, can only be used for paying for goods and services, or C, money paid in exchange for e-money is from an identifiable source. So you can see that the various safeguards are put in to prevent money laundering and counter financing of terrorism, because the limits here are very small. So these are the exempted kinds of activities. Next, B, satisfies the requirements for grace period under Regulation 3.1 of the Payment Services Regulations, and has filed notification to MES. And this notice also applies to a holder of stock value facility immediately before the the Payment Services Act commencement. So basically, like I mentioned earlier, Payment Services Act has superseded the previous stored value facilities and e-money regimes of Singapore. So Singapore was actually a very permissive jurisdiction for issuers of electronic money. In certain countries in the world, it's called EMI. In certain countries, it's called MSB, Money Service Business. Certain countries, it's called Money and Service Operators, MSOs. So in Singapore, it was under the SVF regulations, but now with this notice, these are the applicable laws for this. So what are notice requirements? You need to do a risk assessment, risk mitigation, issue the guidelines on the new products, practices, and technologies, and alleviated the risk points with respect to your submissions to MES. You must conduct customer due diligence. So whether it's simplified or enhanced, it depends on the limits and it depends on the risk levels of the particular client of the business. And these are all the issues that are covered under notice requirements. Right? Reliance on third parties, which means that if you outsource compliance to a law firm or compliance agency, if you have correspondent accounts, record keeping, personal data, etc. These are all issues that were covered under notice requirements. Okay, so this is my contact information. But before I end this, I'll give you a brief overview about what we have been experiencing in this field. So prior to the exemption period notification date, which is 27th of February, many companies and projects didn't even know what all this meant. But as time approached 27th of February, more and more companies and more projects got antsy and excited and required the exemptions to be put in. So a lot of people managed to get this through. And like I said earlier, 420 applicants came through, and there's a list on the MES website. So these entities are exempted in one or more categories and can still carry on the activities until they have heard back from MES regarding their license applications, or until the end of the transition periods. Then so after the notification period for the exemptions, it started the application process for a lot of these companies. So many projects were not sure about precisely which categories applied to them. We have fielded many of these queries. And as I mentioned earlier, some of these categories are more applicable than others. So for example, if you are an e-wallet, digital wallet issuer, then you would need to have the account issuance license. If you're providing third-party APIs, payment gateway services to merchants, then you need a merchant acquisition license. If you have if you intend to provide transfers of money domestically, then you would need the domestic money transfer license. If you're intending to do outward remittances to other countries, then you still need the cross-border remittance license. Then if you are issuing stable coins, if you have your own similar coin to USDT, for example, or if you are issuing, let's say, a digital euro or digital renminbi or digital Hong Kong dollar or digital Sing dollar, right? All these are considered as e-money. So that's under the e-money portion. Or if you are dealing with the older e-money definitions, which are basically any electronic form of money, then that's a requirement for e-money license. Then if you are a token issuer, you have your own cryptocurrency, or if you are an exchange or OTC platform dealing with such currencies, you will need a digital payment token license. And of course, lastly, if you are just exchanging physical money, that's a money changer license. So many of our clients are using a combination of these. So those who want to do B2B types of businesses will go for the merchant acquisition service. And also those who are issuing wallets will need the account issuance. And those who are exchanges or OTC platforms, they will go for the e-money and the DPP sub-licenses. Those who are doing international transfers would be going for the remittance licenses, whether domestic or international, and the money changing if they want to deal with that. So these are the main queries that we get, and we have some clients or some projects who are applying for all 7 categories. We have some who are applying for 6, except for money changing. We have some who are applying for 4, which is account issuance, merchant acquisition, e-money, and DPP. And of course, more traditional clients will only be going for remittance licenses or money changing licenses. So another question that I often get is there going to be a limit on such license issuance? In my view, probably there's no limit because it is up to the authorities to go through the applications and to weed out those that are weaker. Under the old regimes, there were certain periods where some of the licenses, like remittances or money changing, were more strictly controlled. But with the advent of this new Payment Services Act, I don't think there is a limit on the precise number of license holders, simply because Singapore fosters competitive behavior. So the more applicants, the more licensees, the better for the public. And of course, with more money and more float in Singapore, that's also good for the financial ecosystem in Singapore. So I don't think that there's going to be a limit on such issuance of licenses. Another key criteria which a lot of our clients ask about is compliance. So one big requirement under the application for such licenses is with regards to compliance. Whether you're an SPI or MPI, you will need a chief compliance officer who's probably at least 8 to 10 years of experience in compliance industry to be your go-to guy for compliance. And you will need at least a Singapore local director or PR who's based in Singapore who can answer to queries from MES. It's also required to have a Singapore entity. It's not required for the majority shareholder to be Singaporean or a Singaporean entity. Foreign entities can own such licenses, but they will all need a physical office in Singapore, segregated office, which is where their MES supervising officer can come and drop by and have a look and chit-chat about things, right? So these are some of the frequent questions that we get from clients and certain categories that you have to look out for. So I'll end my conversation with you today on this note. And if you have any questions, you have my email contact, and which I will now type into the comments. And not to worry as well, a recording of this will be provided by the webinar provider we are using. I think this will be available within 48 hours of this broadcast. So we will be doing a series of such webinars. So tune in and look forward to seeing you for our other sessions as well. Right now, I have still got a few minutes. I can take some questions if anybody has any. So feel free to type them in to the chat. So I was very comprehensive. Nobody is asking questions. Okay, so there is a question earlier from Leon asking if you have merchant acquisition and settle USDT to the merchant, then do you need to apply under e-money? If you provide USDT as a payment method, then probably you wouldn't need e-money activity license. If you are dealing with USDT, then you would need a e-money activity license. So for example, if you are doing an OTC trade for USDT and earning a difference, then you would need a e-money activity license. But unlikely that you would need e-money if you are just doing merchant acquisition and using that as just a payment method. Second question from Manton Sheath. Yes, you will get the presentation if you can email me. I'm not sure whether you will see this in the slides recording that you will get, but if you email me, I've shared my email, then I will send you a presentation slide as well.
Email and the key contact is your email address.
Okay, so I don't see any other questions. So thank you all for joining me today and look forward to seeing you again. Thank you.